Alright, welcome to this video. I hope I wasn't loud on that intro. Alright, so here we are on the last part of auction market theory. Alright, so we're going to look at the auction market theory, this right here, looking at it from a perspective of retail trading. And of course, retail traders do this. Actually, they never do this, to be frank with you. Once again, my name is Frank, and most call me Mr. Frank Millionaire. But I'm here just to show you how to look at the charts in a more professional way, in an institutional manner. Alright, so I want you to understand that the market is an auction, okay? Those that do not understand English very well, I'll try to mix in with the local language in the country I am, that is Uganda. So I'll be using Uganda, but after explaining in English. So what is a market? A market, just like any local market, a market is a place where people buy and people come to buy, and then others are selling. Okay, so basically it's a big auction. Okay, now the word auction in the local language is moreso. I think that's more like it, whereby people come and then let's say they have something and then they're like, we are selling this chair at 500 shillings. Then the other one is like, I will take it. Then the other one is like, I will take it at 1.5. I will take it at, it's just a big auction. Everybody is bidding and asking, That's what it is. That thing, that commodity, right? So the market, basically, just to understand the market, it's basically a place where people come to buy goods and then others are selling them. Okay, so basically, let's see how we can understand the market better looking at the charts. Okay, so this is it. When you look at your charts, right now I'm looking at gold, and basically because this is one of the most traded assets. For this I use this. Let me use Euro USD. Oh, it's already on my chart and I'm in indices. Just a moment. Okay, so this is Euro USD. Now I want you to understand how this auction market works. Okay, to understand the market better, let's use the local market. The local market, in your local market, basically there are times when the market is closed, okay, or when there are very few people coming in. Let's say like it's a weekend. You don't expect the people to be very many, or there are days, or even time. There is time, let's say like at around noon or right midday. It's very hard for people to go in the market, to be walking when it's when the sun is shining very bright and it's very hot. People don't move a lot. So basically it's the same thing that you see in this market, the way it behaves. There are consolidations. This means that there are very few volumes. When I remember those that, if you didn't watch the previous video, please go back and watch it. You realize that as we said, that volume means orders. Okay, it means orders. Now there are times when volume is very small in the market, then they create these consolidations. Okay, then when the time is okay, let's say the sun has gone down, now people can move, then the people inside the market can start working. Okay, they can start getting the big transactions will come in the market. So this is the same thing, the same behavior throughout the whole market. To understand this, these markets, it's basically the same thing as looking at your local market in your local area, right? Whether it's a supermarket or whatever it is. Okay, so you realize there are times when it's very hot and it's not conducive for people to move. There are consolidations. Then when the market opens and the weather is when the weather is conducive, then people come in and then you will see boom, okay, big moves. Then again, the time, because people cannot shop the whole day, so then you will see consolidations, then boom, okay, then consolidations, then boom. Basically it's the same thing. Then they're like consolidations, then the big move, consolidations, big move. This was a little bit unstable, but we had a few big moves depending on the weather. But basically you realize that 80% of this is consolidation, big move, consolidation, big move, consolidation, big move. Now the word consolidation means when the price is moving in a range, more like a tunnel. If I do this, okay, price was moving in this tunnel. Okay, we can see another one like here. Price was also moving in this tunnel. It's more like a tunnel where price is moving up and down, and then it makes a big move. So in say consolidation, basically the market is moving more like sideways. Okay, it's moving up and down, but it's moving inside that tunnel. So that is what we call the consolidation. So the consolidations only mean one thing, that the market is indecisive. Okay, and this happens in most cases when there are very few people in the market, or very few orders in the market, or very few volumes in the market. So you will see consolidations, then big moves. We can look at this, we can actually backtest this. I'm going to backtest the theory of auction market theory. That was just by the way. So make sure, to me, I make sure that I'm seeing as small, I see the whole chart as one line. Otherwise you're going to say that it's going down or it's going up when you've already seen it. Okay, this is something, by the way, that very few mentors do online, because they are afraid they might say something and then it's not right. So anyway, I'll start randomly. This is around July. This is the 7th of July, so I'll just start from there, and I'll do this. Okay, so basically those that just missed me backtesting, let me do this again for you, all of you guys, so that you can get this again. Okay, we are at the current time, of course. So I reduce the chart here, drag it down, drag it down, drag it down, okay, till I see that it's one line, so that I don't lie to myself that it's going down when I've already seen it. So I'll come to the replay here, or the bar replay if you're using your phone, and click on it, and then just come and pick anywhere. Now this feature might not be available to you if you don't have a premium account, but those that are inside our Forex traders room, the link is down below in the description, and they know that we have, instead of paying $14, okay, instead of paying $14, I can just do this. Instead of paying $14, I think it's 14.99, which is around $5,500 mukakaaga in Ugandan shillings. You will have to pay only 20,000 shillings, which is around 5. All right, so as I was saying, you will need to pay only $5, and of course this is 20,000. Of course, maybe the transaction fee will be around 2,000. So this is basically what you will pay for the TradingView app premium to be able to come and backtest, okay, and backtest. So apparently I'm looking at Euro USD, and I just put on the 4 hour. I think I can also add the hourly timer on my chart. Okay. Okay. So basically this is my chart right now. Just go back to where it is, and the auction market theory, without even if I don't backtest, because realize that before this is just visible, okay, before any big move, we have a consolidation. Before any big move, we always have a consolidation. So backtesting will just be to prove. So I say when I'm backtesting, I click here and then make sure you're seeing one straight line like this. Okay, so come to replay, up, and then choose anywhere. Okay, and then the reason why you do this so that it's a straight line, so that you don't lie to yourself, because you might have seen it already. So to me, I don't want to say that we are going this side or this side, because I haven't told trend lines, but you can just look through wherever there are consolidations. Okay, the big move comes then. Okay, the big moves come. You can see that this was a consolidation, then a big move came. Then we're playing through, then the big moves come. Then after the big moves are done, they always form another consolidation. After the big moves have come, they always form another. You can see that another consolidation is forming right here. So then a big move is going to come after this consolidation. So that's the start of the big move. So doing this, the backtesting helps you to be consistent, because you've watched the market behavior. Okay, now the big moves have come. So consolidation, big moves, consolidation, big moves. So after the big moves, they always form a consolidation and then make other big moves. And you can see now, you can see this consolidation right here. They formed a big consolidation right here, and then made the big move. Of course, now this is the imbalance, then consolidation. Now after the consolidation, now we're seeing another consolidation, then a big move is about to come. Then it comes, bam, you can see. So basically you can do this for your own good, and this just tells you what the market is. As I said, the market is just an auction. Like, there are times people prefer to come shopping, and there are times they don't prefer coming shopping. So before that time, you must set an alarm, at least in your phone, where you can know that right now people are about to come in for shopping, because the behavior of people can be predicted. Okay, this is why you can see that every after a consolidation you have big moves, every after a consolidation big moves, every after a big move. People have times they prefer to go shopping. So basically this is the auction market theory. It's as simple as that. Though for institutional traders, we do not use candlestick patterns, and I remember telling you yesterday that everything, this is called electronic trading. And if you don't know the history of trading, and I'm confusing you with this information, you can just as well go back to the previous video and check it out, the first part of auction. So it's auction market theory part 1. This is part 2. All right, so basically, as I said that in electronic trading we use indicators. Okay, even these candlesticks, Japanese candlestick, they are indicators, just like previously shown to you. So if you've been doing Google, I think I'll use this one that is commonly seen. If you've been seeing Google and you come to like price, you see that they use the area line graph. So if anybody tells you that they don't like indicators and all that, they just basically don't know what they're talking about, because these are all indicators. Electronic trading, we all use indicators. So you can prefer to use this area line graph or the candlesticks. So basically most people love this. And yeah, this has been the auction market theory. And if you want to join our free Telegram group, Forex Traders Room, it's in the link down below. Yeah, we have Zooms almost every day. And for mentorship, you can just of course just directly contact me via WhatsApp. Still, the WhatsApp number is in the link below. Remember to like and subscribe. Also invite your friends for these videos so that they can understand the market better. So next video, we are going to be looking at how to tell where the market is going. So Until next time, see you.